Hello and welcome to Virtual Investor Conferences. My name is Bob Power, and on behalf of OTC Markets, as well as our co-host, Independent Investment Research, we're very pleased you've joined us for our next live presentation from Giga Metals Corporation. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you're interested in scheduling a meeting with Giga Metals, please click on the Meetings tab found on the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Mark Jarvis, CEO and Chairman of Giga Metals Corporation, which trades on the OTCQX Best Market under the symbol HNCKF and on the TSX-V under the symbol GIGA. Welcome, Mark.
Well, thank you very much, Bob. It's a pleasure to be here. And I'd just like to welcome everybody who's chosen to attend this presentation. Now, I'm going to assume that a lot of you are already familiar with our story, so I'll probably be going through the slide deck fairly quickly and to leave as much room for Q&A at the end as we possibly can. So here's a picture of our camp, and you can see that this is excellent terrain for building open pit mines. Standard disclaimer. So we have just announced a truly transformative transaction. We got Mitsubishi Corp, one of the largest companies in Japan, and certainly the largest trading company in Japan, on board as a minority investor in the project. They're contributing $8 million, and we're going to spend that money taking the project to a more advanced level of engineering than we're currently at, a level called pre-feasibility. And this is after about 3 years of discussions. The Japanese are very methodical. They do not move quickly. But once you've got a deal, you've got a deal. And they're a pleasure to do business with. So that's the next step, is we are already moving forward on the pre-feasibility study. They are the largest commodities trading house in Japan. And what they like to do is they like to own minority working interests in producing mines and leave the operations to others. So their partners in mines around the world, and their partners include BHP, Rio, Glencore, Anglo, Teck, all sorts of big names. And what they're interested in is getting the offtake from these projects, or as much of it as they can get, to feed into their trading arms. And they're very, very good, marketers of the various commodities that they trade in. They also, I have to say, take ESG issues extremely seriously. I mean, this ESG, lots of people talk about it. There's a lot of yak. Mitsubishi is serious about it. I can report that to you. And in fact, it's the environmental aspects of this project. That's one of the things that drew Mitsubishi to this project in particular. So who are we? Well, we're a TSX-V and OTCQX listed junior mining company. Our PEA level engineering modeled producing an average of 33,000 tons a year of nickel for 37 years. That is a giant deposit by any standards. We're in a good mining jurisdiction. One of the strengths of our project is the simplicity of it. 99% of our nickel and cobalt are in a sulfide mineral called pentlandite. And so you dig the rock up, open pit mining, crush it, grind it, and then you put it through froth flotation, which is an old technology, a very reliable and simple technology. And all you have to do is float pentlandite and suppress everything else. It's really, really simple. And that simplicity translates into low technical risk. And that's a very, very important consideration. And these are just some summary information on our PEA. So as you can see, the capital costs are significant. Put it all together to get up to full speed. We model building it in stages, where the final stage costs an extra $500 million to get up to full speed. But put it all together, it's about a $2 billion capex. Very challenging for a small company. But now we've got a very big partner. And so suddenly the odds of this tiny company building this giant mine, the odds have gone way up. This is just a comparison with some other projects of a similar scale in Canada. And it's just really to point out, the only point I'll make on this slide is that we are the only one that has done our engineering to model taking our nickel to class 1, which is suitable for batteries. And the other projects have all modeled that they would be selling to the stainless steel market and made assumptions around that. Here's our timeline. And the first goal is to complete our pre-feasibility study by the first half of next year. We're hoping to get it done by the end of the first quarter, in fact, but there's a lot of moving parts to this, so we played it safe in making this prediction. So from a very low-grade deposit, we can make a very nice concentrate that's very low in deleterious elements. And so what we did is we modeled selling this to a smelter, typical smelter terms. This is a premium product for any smelter. But what we're going to do with our pre-feasibility studies, we're going to do 2 studies. One will be modeling the same as we did in the PEA, just to a higher level of detail. We've also done some trade-off studies that I think will improve the economics of this. But we're also going to do a separate, what we call a bolt-on study of putting a pressure oxidation circuit at the back end of our circuit to take our concentrate and convert it to mixed hydroxide precipitates. And the reason we're looking at doing this is that this is the chemical form of nickel that is the most in demand from battery makers right now. And we know from previous test work on our concentrate that we can make a very, very high quality MHP product that will be also much in demand. A product that's very low in deleterious elements such as manganese and copper and iron. You don't want any of those in the mix either. So just a beautiful product that we can make. And we will be modeling that technically and economically in the next round of engineering. We've got a beautiful place to store our tailings, and we have modeled modern tailings management, very, very low risk. It costs more to do it the way that we're planning to do it, but safety is everything. And you can see this is an aerial view of our tailings management facility. We're designing it for, there will be a very small water pond with a lot of beach, as we call it. So once we grind up our rock and extract the valuable minerals, what's left, the tailings, is a silicate sand. And if you expose the silicate sand to the atmosphere, it will absorb CO2 from the atmosphere, and the silicates convert to carbonate minerals. And these carbonates are a very benign form of mineral. And the CO2 is locked away for hundreds of millions of years. So it's a very interesting phenomenon. We can measure it, and we're working with Professor Greg Dipple at the University of British Columbia to further advance our studies. But this CO2 sequestration means that we've got a shot at being a carbon neutral mine. This, by the way, is one of the attractions for Mitsubishi, is they're interested in projects that have got excellent environmental credentials. I'm not going to get into nickel prices and supply. We just don't have time. I will say that in the last 4 years, batteries have gone from 5% of the nickel use to 13%. And the amount of nickel being used for batteries as opposed to stainless steel and other uses is just galloping away. It's amazing how quickly that use is growing. And that new source of demand is what's driving nickel prices. We are in shortage already of nickel that's suitable to convert to the cathode. We're in no shortage of another form of nickel. It's called ferronickel, which is suitable for stainless steel. There is no shortage of ferronickel in the world, but there is a shortage of, good class 1 nickel. And these are just some slides about. So these are the battery projects that are announced already in North America. And if you build all these batteries, depending what percentage of them are LFP and what percentage of them are nickel-based chemistries, you need anywhere from 250 to 450,000 tons of new nickel supply just for these North American gigafactories. And in North America, there's just not that many projects. And then of the projects that are in development, including ours, there's not enough. And so these projects, the ones in green, have had engineering done that aim at producing class 1 nickel. The ones in blue have targeted the stainless steel market. They've targeted to produce ferronickel. This Inflation Reduction Act is very interesting for us. I think it takes what was already happening and provides tailwinds. So what was already happening is supply chains are changing. The whole notion of just-in-time inventory, that's changed. And it's been changed by the war in Europe, and it's been changed by the consideration of what does China plan to do about Taiwan. There's a lot of saber rattling happening. What happens to your supply chains if you're relying on China and they invade Taiwan? What happens in a war? And, this possibility, which once seemed perhaps remote, is not seeming quite so remote anymore. So people in general are wanting more secure supply chains, particularly for critical materials. And they want their supply chains closer to home. They want their supply chains in jurisdictions such as Canada that are stable democracies that aren't going to head off to war on some imagined slight. So, everything's changing. And also for the automobile manufacturers and for the battery manufacturers, people that we've been talking to are recognizing that for critical materials such as nickel and lithium, they may need to do vertical integration. And that thought process is going on all the time. I mean, a year ago, I wouldn't have said that a car company would invest in a greenfields mining project. Today, that situation has changed. I've had car companies tell me that they have been authorized by management to invest in projects. That's a major shift, and we're seeing it happen. So that's very interesting because we're very interested. We are talking to car companies and battery companies. Our next stage that we would like to do is to sell another minority interest in our project to a car or a battery company. And I can tell you that getting Mitsubishi involved, Mitsubishi, who knows the mining business, who has the expertise in-house to evaluate which is a good project, which is not such a good project. Mitsubishi, in some sense, has done the due diligence for everybody else because their election to put money into our project is a stamp of approval. It's a real validation of our project. So, and this is just a bit more about the nickel production profile and where it comes from. And this is getting back to that the Inflation Reduction Act. you know, here's here's the countries that are sort of considered stable supplies of nickel. It's not that much. China, Russia, Indonesia. These are not uh, countries that enjoy free trade arrangements with the United States. And so part of the Inflation Reduction Act is that in order to get your rebate on your electric vehicle, 40% of your raw materials, of your critical materials, have to come either from the US or from a country with a free trade arrangement with the US, such as Canada or Australia. So very interesting. It's going to be very helpful for us to get our project developed. So refined nickel production from free trade allies is only 222,000 tons per year. So it is going to be a challenge to ramp up for simply for the gigafactories that have already been announced in North America. This shows our price sensitivity analysis. Basically, at the low end of nickel price range, our project has marginal economics at best. But as you ramp up the nickel price through $10 to $12 and $14, it's currently a little over $10 a pound. Our depreciated net present value at a discount rate of 8% just starts to ramp up very, very rapidly. And this is part of the attraction of an extremely large deposit like this, is that the economic value of it increases so rapidly in a bullish cycle. Here's a cash flow comparison to a typical successful HPAL project. This is where they're getting nickel from Indonesia, Papua New Guinea, places like that. We beat them. This is at 750 nickel, which is our base case in our PEA. I believe that the price will be moving up for the next stage of engineering. As I say, the price is already at 10. It's spiked higher than that. Things are looking quite robust in terms of nickel pricing. But we're actually economically superior to even the successful HPAL projects, and not all of them are successful. They're technically very challenging. But in Indonesia and Papua New Guinea, these projects are getting built because you can basically start building them tomorrow. These jurisdictions don't have the kind of stringent environmental review that Canada has. So, it's actually a challenge for us compared to other jurisdictions. But it's also the flip side of that is that people that are buying raw materials from Canada can feel good about the environmental standards that are being met to produce those materials. Laterite deposits are strip mines. They are typically 10 meters thick or so, and they go on mile after mile after mile, and in many cases through tropical rainforests. So the environmental devastation being caused by not only the HPAL projects, but also the nickel pig iron projects that supply the stainless market in China, there's a lot of environmental devastation going on, that people aren't really tracking properly. And then with a lot of the HPAL projects in Indonesia and Papua New Guinea, they're just simply, the tailings are getting dumped in the ocean. I guess it's out of sight, out of mind. But my point is that we, if you want environmentally responsible nickel, you need to look to a jurisdiction like Canada. We're also a low carbon intensity. We will be a low carbon intensity producer. We're at the very, very low end already in terms of our carbon intensity per nickel or per unit of nickel produced. And we've got a path to get to, neutral, zero nickel or zero carbon. We haven't proved that yet. We are working on that. We're doing research in conjunction with UBC, and we think we've got a shot at getting to zero carbon. And if not, it'll certainly be extremely low carbon intensity. We've got a strong board. Martin Vidra, in particular, our president, has been leading the charge. He gets full credit for this deal with Mitsubishi. Martin and I work shoulder to shoulder on this, of course, but he and frankly Bob Morris, another director of ours, both worked in the business of selling nickel and cobalt products to end users and to trading houses in their previous careers, and so they both have networks of people in the end user category. There is no investment bank in the world that can compete with our people in terms of running a process. And so I'm very grateful to both of them that they've selected our company to join the board of and to work on. Here's our share structure. And there's the question, where will all the nickel come from? Well, we've got one of the answers. And there's our contact information. So we are open for questions. One of the questions, are you still looking for strategic partners? The answer is yes. We think a car company or a battery company would be the logical next mover. And there's a great deal of interest. I can report that. As I say, the supply chains are changing and people want more security of supply. And not just security, there's a movement towards vertical integration, particularly for the most strategic materials. There's another question, how will you finance the 1.4 billion phase one capital cost? Well, stay tuned. We're still working on that. But one of the answers is that the Mitsubishi Group includes a bank, and this bank finances mining projects. So, that's a pretty nice piece of the puzzle. But we'll also be looking to our partners to help to finance. Another question. Do you anticipate any government support for development of Turnagain? The answer is yes. Our government in British Columbia is really interested in the concept of perhaps building a gigafactory in British Columbia, or if not, at least processing the raw materials as far as possible before supplying the battery market. And we've got a mine that will be environmentally friendly. It sequesters CO2 from the atmosphere. Because of the nature of the rocks, there won't be any of the nasty things that you can get with some mines, such as acid rock drainage, won't be a factor with this. And so, now the government has already been helpful. Something we modeled in the PEA was a hookup fee to get hooked up to a BC Hydro. That's well over $100 million US. That has now disappeared. There's a possibility that they could help with extending the hydro line up Highway 37. That's certainly not a done deal, but it is something that we are encouraging, and we're getting a fair audience on that. Let me say this as well. Mitsubishi getting involved as a partner increases our credibility with the government as well, because the government can now look at this project and say, well, the odds of actually getting a mine built here have just gone way up, and so we should pay more attention. Let me see about other questions. Could we comment on activities by the majors Vale and BHP? Well, they're in a very good situation. They are nickel producers, and I think they're in very good shape. They've been doing deals, but I don't know any of the details of the deals that they've been doing with car manufacturers to supply. So I don't know what kind of pricing is involved or any of that. So I'm afraid I I can't comment too much on that. There's a question, you file papers for delisting, and we haven't filed any papers for delisting. So I won't answer that question. Here's a question. What was Mitsubishi's main draw to working with you? Well, it was twofold. One is that we've got a deposit that is becoming more economic every day with nickel pricing and with the engineering we're doing and the trade-off studies that we're doing, but also the sheer simplicity of the project and the low technical risk of the project. You know, if you're going to spend $2 billion to build a mine, you want to have some assurance that it works. And that is, we have got perhaps the simplest processing circuit of any potential nickel project in the world. And so low technical risk. But they're also attracted to our jurisdiction, which says, British Columbia has adopted the UN Declaration on the Rights of Indigenous Peoples. That is actually attractive to a company like Mitsubishi. And they like the low carbon footprint. They've got a corporate goal of being zero carbon by 2050. And they like, environmentally, we've got a whole process yet to go through, but we've been studying this and we don't see any showstoppers. So, and neither do they. And I guess the last question is, how has the Inflation Reduction Act impacted this deal or changed the landscape for Canadian juniors? I think I've already answered that to some extent. It's providing a tailwind. It's a smart way, I think, to incentivize construction of mines in North America. And I believe it will be successful in incentivizing that. It's a much better route than, some people have said, well, government should be investing in mines the way the Chinese government does. I don't think so. I just, I think governments picking winners has a very sad history, and it's better to incentivize and let private industry figure it out, in my view. Anyways, that seems to be the end of the questions, and so thank you very much for attending, and good luck to you all.